don't post them. No, I'm going to say this as plainly and as simply as possible, is that I don't just blindly look for an up closing day and call it a green day and guess. Now your job is to execute the best setups. We're not here to guess. We're here to execute the best setups. Cherry pick. Your job is to cherry pick the best setups. So if we walk through our daily charts and understanding that when a new month starts, a new timing cycle starts. In the masterclass, we go over this. We talk about 3 higher closes, 3 lower closes, beginning of a new month. But I want traders to recognize that when a new month starts, we can have stop hunts, we can have range reversals, we can have breakouts. Markets only do 3 things. I'm using daily charts. I'm targeting daily ranges as an opportunity based on signal days. Again, I'll repeat, I'm looking for the exact same setups over and over and over again. I like to short markets, so I'm looking for opportunities to pump and dump. Now, markets are either going to close and break out and continue to trend, close and break out, reverse and fail, or they'll stay in a trading range and we can still have sell high or buy low opportunities. Now, we've talked about a simple equation of where a market will open up, new month, new timing cycle, trade lower, trade higher, make a high, make a low, and close out the month, the upward direction or the downward direction. And that can give us our monthly charts. Just simple common sense thinking. Encourage traders to do by walking back through their higher time frames, understanding we have levels, monthly levels, weekly levels, and daily levels. And I'm looking for opportunities based on those levels. When traders say the phrases, but it was the first green day because it's an up closing day, or it was the first red day when it's a down closing day, is that the candidate that is setting up for the rinse and repeat 90-10 parabolic opportunity? Front side, back side of the week, front side of a new month. We're on the front side of a new month. Again, we're targeting the best setups, not just a day that closes up or a day that closes down. So when a new month starts, new timing cycle, we have other higher time frame levels that can be an indication when a new month starts. Market breaks down. We went and talked about this in the masterclass. Again, 3 lower closes. We have an area of previous buying, we may have a first green day setup, day 1, day 2, day 3, and a market that potentially now is setting up for a first green day template. We have our open, a low in place, and this market may now be proceeding to continue to trade higher. Pulling back towards the end of the month, we have our open high, our low, and our close for the month. A new month opens in a market that's been breaking out, making higher highs, higher lows, breaking out, pulling back, breaking out, pulling back, breaking out again, closing in breakout, coiling sideways for a large range dump into higher time frame buyers. Again, an area where the market had broke out in the previous month. Now, the important part about this is just recognizing maybe you're only going to have a clean 90-10 setup in a session on any particular day because of high impact major red news, or it just may not be the setup that you trade the best, or it traded in a different session. So we have a market that's exploded in breakout, new month, new timing cycle. Again, traders will recognize 3 higher closes after the breakout. We have a market that's gone into breakout and continued 1, 2, 3 into 3 higher closes and going into consolidation. So here's the thing. I'll repeat this. I'm not trying to guess when a market or catch the high, catch the low because it's in breakout. If a market's in breakout, we're looking for indications once it goes into consolidation of either a continuation, a reversal, or nothing at all. Just because a market moves or is going to move or do anything else, is it a 90-10 setup in my New York session? We're nearing the end of the month. A market's gone into consolidation, but it's also given us
T-Mobile's Guide to Moving Day. Step 1, get T-Mobile 5G home internet with 2-day free shipping. Step 2, get online in 15 minutes. Step
signal, large pin, pulling back, Paul Tudor Jones. If a market's preparing to go on a range expansion, it may be giving us an indication of that. We have an inside day after our breakout pullback. Then we have an inside day. New month, new timing cycle. So here's an easy way to walk through your charts. Draw the high and the low of the first day of the month. That takes about a half a second, and you can do it on any of the instruments in your basket. So let's not do anything. Let's just draw the high and the low and wait for a market to break out. Once we have a market closing in breakout, markets only do three things. So once we have a market that closes in breakout, we can go to work. Now here's the question I have for traders. We have a market that's on day 1, day 2, in breakout short, day 3. Day 1, day 2, day 3, we've filled the gap from the original breakout. That's been filled, which, as Al Brooks would say, is just a large range bull candle. And now we have a market that has set up heading into free cash Thursday. Now, let's go back and contrast that with our best first green day setups on any market. So again, not just one market, but any market, so that we understand when markets go into breakout and they go 1, 2, 3, how does the market set up? Oh, we're way down low. Well, that may be a first green day explosive reversal. Now, here's the thing again, I'm going to repeat this. I'm not trying to catch the first green day low and catch the low and everything else. Where is the indication from the market that I may have a first green day template in place? Beginning of a new week, new timing cycle, we may now have a market that's going to give a buy low setup. A buy low setup in a first green day template. When you're hunting first green day templates, you can understand that if we're looking for a market that is maybe dumped down, do we have an indication of other higher time frame buying? Now, when I'm up high, we're in the abyss. We're in the middle of no man's land. This market is in breakout short. It broke down first. We're up high. It's in breakout. Day 1, day 2, day 3, pulling back. Breakout, pullback. This market could continue in the downward direction. We have a market that's gone into breakout on day 2, typically expanding the range front side of a new month. This market could continue to trend. Day 1, day 2, day 3, pulling back, 2 types of trades on a day 3. So we have a market that closed in breakout on Tuesday. Well, now we have the high of the month in place. There's our high bull candle, 1 hour chart. Just a little simple. So there's no hidden information here. The market closed in breakout. So on day 2, that's the high of our month. That's the low of our month. It continued lower on day 3 before pumping back up. Now we had day 1, day 2, day 3. We have higher time frame selling below this level. That was New York open on Tuesday. The breakout candle, so let's go back to some simple things. Markets only do 3 things. The market broke out on the New York Open and continued to trade lower. Continued to trade lower. Day 1, day 2, day 3. Went into consolidation. We talked about this yesterday. It broke out again on the New York Open. Markets only do 3 things. There's our New York Open candle. It pumps up into higher time frame selling. We have a breakout. 1 candle. There's our breakout candle, New York Open. We have an engulfment up top. And look again, 1, 2, 3 higher closes.